This is Alan Farley from FX Empire. General Electric topped out at the start of the new century, right up around the $60 level. Posted a lower high in 2008, and then posted another lower high at the end of 2016 and early 2017. It then fell to the 2009 low in 2019 and bounced, coming back down to that low after the pandemic decline in 2020 and carving this very broad double bottom reversal. Now the stock confirmed a new uptrend when it reached above the high of the middle of the W right here just about last week, a few days ago. And so we have a new uptrend. It's also trading above the 200 week moving average for the first time since 2017, which is really good news. There's it right here. And so we do have a nice uptrend. However, there's a lot of resistance up above the between the $15 and the $20 level. Not visible on this chart, but the 200-month moving average is right around 20. Plus, we have a lot of Fibonacci levels coming into play. We have the 382 at 1550 and the 50 at 1858. I do think there is more upside to this impulse that started right here in the fourth quarter. But reward risk is starting to turn against new positions after a rally of about 250% off of this May 2020 low. So I think you have to tread lightly. In addition, the company this morning announced a spin-off of a lot of its aviation exposure, but it's really taking that exposure back by taking a very large share of the company that it's selling the division to. So it's retaining that exposure. It also announced a 1-for-8 reverse stock split. So the stock's no longer to be around 14, it's going to be around 112. That's also going to drop the number of outstanding shares by a significant amount, divide by 8. It's going to make the stock a little bit easier to short. Right now, the short float is less than 1%. Once this thing's above 100 and as it has about 1/8 of the current float, I think the short side gets more interesting, especially if this recovery effort falters in coming weeks or coming months.